to page, I'm sorry, my little flag, to page 47 in the larger report, the comprehensive, annual comprehensive report. We do issue two types of financial statements in the audit report. One, which is starting on page 47, is what we call a full accrual. It's basically taking the government and trying to put them more in line for what a for-profit company looks like. And so the statement of net position, if we take all of the assets of the school board and take those collectively, which includes the buildings, our investments, and so forth, and we pay off all of our liabilities, we actually have a negative net position of $567 million. That's that last line. I know that's very alarming at first when people look at that, but one of the reasons is quite a few years ago, the GASB Standards Board said, okay, we promise our employees that if you give us your life of service, we will pay for your pension and we will pay for your health care over the life of you as well as possibly your spouse. And so if you look almost right in the middle of the page under the the liability section, you're going to see the OPEB liability. So when your actuary came in and took a snapshot of your current employees as well as your retirees, they're estimating the cost of that to the school system is going to be $616 million. For various claims of being paid out over the lifespan of those employees. And then the net pension liability is $257 million. So if we carved that out of that $873.8 million collectively, if you didn't have that, we would actually have a positive net position at year end. However, this has no impact on our day-to-day financials or the school system meeting their day-to-day obligations. And so for the day-to-day financials, that actually starts on page 51. For the general fund, if you look at the second line from the bottom on the general funds column, our total fund balance was $136 million, almost $137 million. Out of that, the line right above that, $62 million is unrestricted for, it's not committed or restricted for any particular purpose. It's for future obligations to meet our day-to-day financials. And that represents about 23% of our total expenses. So that is a pretty good solid fund balance for the school system y'all's size. The other thing I want to point out is the second column is our Bossier Education Excellence Fund, known as what we'll usually call it as BEEF. Its total fund balance was $69 million, and we actually had at the end of the fiscal year about 2.5 that was accumulative in interest that can be spent on future instructional activity. The Education Stabilization Fund, that is our ESSER money collectively, and you'll notice it has an actual deficit this year of $1 million. Reason being is it's a timing thing. We actually had $1 million of expenses, but we did not receive that reimbursement from LDOE until after the 60-day window. So we did receive it, but it wasn't until like November. So that will clear out for the 2025 fiscal year end. And then the non-major governmental fund, that's collectively sort of everything else, and we'll look at more detail of that. But collectively, they actually have $38.7 million. For our profit and loss or revenues expenditure statement, that's on page 54 and 55 for these same funds. For the general fund, we brought in $300 million. This is actually $19 million more than what we brought in last year. The big ticket items that we received this year was we actually received about $6 million more in property taxes or ad valorem taxes. We received around $4 million more related to interest. And then under the state sources, we actually received about $10 million more from state and local funds. And that was dealing with, we got about $3 million in flood control, as well as $6 million that we received for the one-time stipend that had to be paid out to our certified personnel. For the expenditures, total expenditures in the general fund was $271 million that we spent in expenditures. This is a $14 million increase from last year. However, again, please realize that $6.4 million was associated with that money that came in for the stipend. So before any transfers in and out, general fund had an increase in fund balance of $28.6 million. If you continue to the next page, we transferred out a net of $1.3 million, so we actually had an increase in fund balance of $27.2 million. The Bossier increase in fund balance was $3.8 million, and then the non-major governmental increase was $1.6. Internal service funds, if you'll turn to page 58. The year we actually had a loss of $7.8 million, leaving a deficit, a larger deficit in our internal service fund of $14.3 million. Even though the school system did increase our premiums around $3.5 million, the problem is our actual claims ended up increasing as well, around $4 million. So the school system tried to absorb some of the loss from the prior year, but the claims just sort of outbeat it this year. For our non-major governmental funds, it makes up 3 different categories, and if you'll turn to page 104 with me. So the first categories are special revenue funds. These funds are mainly our cost reimbursement grants. It also includes child nutrition as well as the student activity funds. So collectively, those funds actually had a loss of $1.4 million. And we'll see that in a minute, but the big loss this year was related to the child nutrition program. The debt service fund is those monies that we're bringing in for ad valorem tax to pay for the ongoing or the current obligation of debt, principal, and interest. We actually had an increase in fund balance of $3.2 million in those for future debt payments. And then the last is the capital projects fund. We have 2 capital project funds. We'll see the more details of that, but collectively they almost broke even. They had a loss of $40,000. I'm going to go through each fund, but on page 110 and 111, this sort of breaks out more detail of what makes up that special revenue fund. And as I mentioned, the one that really had the loss this year was the child nutrition program. The third line from the bottom, we actually had a loss of $1.6 million. So we went from a positive $779,000 fund balance to a deficit of $803,000. For our debt service funds, if you turn to page 123, debt service funds actually had an increase in fund balance. The Unified Tax Fund had an increase of 2.6, and the QSCAB sinking fund had an increase of 545,000. And then the QSCAB actually will, next year will be its last, because this is before the actual payoff of the QSCAB bond. And then the capital projects funds, those are on page 127. We do still have some money left in the 2012 bond construction fund. We spent the net of $2.6 million, but we still have right at $10.6 million left. Again, this is as of June 30th, 2024. So the activity that's occurred this year is not reported here. And then our storm damage fund, this is the last year reporting that it zeroed out this year. Before I go to the smaller report, is there any questions on the annual comprehensive financial report? All right, so your smaller report is our single audit and other information. On page 11 and 12, this sort of just shows you the various buckets of federal dollars that the school system has received for the fiscal year June 30th, 2024. Collectively, our federal dollars were $51.4 million that we received. From the audit standpoint, we have to go through each one of those buckets to determine what programs have to be tested. Out of those, and the 2 programs that we tested this year was the ESSER funds, which makes up ESSER 3. We have a new real-time fund that was received this year, as well as the Title I fund. 14, this is our summary of auditors' results. It's sort of broken down in 2 sections. The first is the financial audit section, this relates to not only the financial statements themselves, but also any state compliance. We test state compliance and internal controls of the agency as a whole. As I mentioned, for the financial statements, we did issue an unmodified opinion, so that means there's no modifications to the report, and it's a clean opinion. The financials were fairly stated. However, even with the clean opinion, we did issue one finding in this year, and it's finding 2024.001. I'll go over in a little bit of detail what makes that. For the federal funds, as I mentioned, we tested the ESSER and Title I funds. We did issue an unmodified opinion as well. Therefore, it's a clean opinion for the federal compliance. However, we do have one finding related to internal control, and that's finding 2024-002. So the first finding is on page 15. This finding is related to internal controls and compliance over financial management. This one really, the big thing that drove this finding this year is the new system, the new ERP system that was implemented this year. Not that anything's wrong with the ERP system, but just the time that it was involved for the accounting staff to implement that and implement it correctly. There were several things that, from the audit standpoint, that we either noticed was done not necessarily timely, or they were overlooked completely. The other issue that we had this year is there was a little bit of turnover in the accounting department as well. So in this, basically when we looked at the financial reports that were submitted, one thing that we look at is to determine are financial reports being provided to the board on a regular basis, some type of budget to actual. And that was one thing we noticed, that the system just really didn't have the capabilities at the time, or we didn't know the capabilities at the time to get those reports submitted to the board. The other thing was the bank reconciliations. Because of going from one system to the other and a new personnel change, the bank reconciliations were not done timely. So that's the first finding. The second finding is on page 17. This is dealing with internal control and compliance over the Title I program. This is mainly dealing with more record keeping. And it's from the federal aspect, we have to determine, okay, for an employee to be charged to a federal fund, that person has to sort of certify that, yes, they spent their time solely on that federal program. And so the time certifications were not done in a timely manner. They were actually done, just not in a timely manner, as well as the payroll, as far as just documentation on the payroll, could be improved. And so both of these findings, though, I will say both of these findings have already been addressed by management. They've already have implemented processes, so these will not be repeat findings. And so those should be cleared out this next year. The other thing I'd like to point out, I'm not going to go through them, but on page 24, this will start the statewide agreed upon procedures. And a little thing, something's changed this year, but in the last several years, we've had to test all the procedures. The state has now implemented a year one, year two type thing, and so the 2024 audit report is considered year one. So for next year, we would only have to be required to test any items that had exceptions. And so next year's report will be much smaller, and then 2026, they start the process over again. That'll be year one. They'll require us to test everything. And then the BPSB agreed upon procedures, they actually start on page 34. We did have a couple comments related to this. One is is due to the implementation of the ERP system. The other one is a challenge that all of our school systems are seeing. One of the things that the state requires us to test is a point in time, which is October 1st. And they want us to confirm, okay, this information at October 1st, does it agree, that was submitted to LDOE, does it agree to the school system's information? The problem is when the state has gone to this more real-time system, it's called EdLink, it's very hard in their program, not the school systems, but in their program to actually get a point in time because it's constantly changing. So we have seen this across the board. We've actually talked to the state about addressing this. I know they're working on that to be able to give us more a point-in-time process. But the exception's really saying, okay, we cannot trace the school system's records to the state's records because we can't get that point in time in the state's records. So we're hoping that will be resolved in the future as well. Any questions? I do want to thank your team. Y'all have a great team here. And we pretty much turn everybody's world upside down when we come. And so we do greatly appreciate them and all the hard work that they have put in.
Thank you, Ms. Tynes.
Thank you.
If I may, you might just add a footnote to the report and so forth. I think this year was Mr. Rowland's first year as superintendent, and he was concerned about the couple of comments that are in the report as far as findings and so forth. You know, really our main purpose is the audit of financial statements and et cetera. And as Amy mentioned, we didn't have any exceptions. We issued a clean opinion on that. So kudos to the school board for that and the work that the superintendent and Nisha and her department makes and so forth. One of the comments that was made was really as results of going through the transitions of new software. We had about 5 or 6 school boards that we work with that changed softwares, and we still have, and Bossier School Board had their software implemented for the entire 23-24 school year that we just audited. We have 2 school boards right now that one has not implemented it yet. And yet they started back when Bossier started and the other 4 or 5 school boards started. We have another one that's about half implemented. It's a major event to go through the software conversion, particularly when you're doing a complete conversion, et cetera. I would probably suspect that in Nisha's department, there were probably 3 or 4 to 5 people that probably spent at least 40% of their time during this school year getting that implemented. So I think the finding concerning the accounting is really as a result of that. We haven't had that kind of finding in the past, and I think this year that'll go away. I think they've already addressed it, and just with the fact of now that it's fully implemented, I think all of those things will get it corrected on their own. So, you know, your financials are really good. As she mentioned, you got $136 million in fund balance. And if you look at your expenditures, that's about $270 million in total expenditures that you have. So to put that in perspective, you almost got 6 months of reserves that you could not collect. You could avoid collecting any more income and still be able to pay your bills and et cetera in the general fund. And that's extremely strong. We have some government school boards that if they have 1 or 2 months of reserves, that's good, whereas you got 6 months. So your financials are really good. As you know, you got beef that's you know, like fabulous for the Bossier and this students in this area and et cetera. So you overall, even with the findings, if I'm the board or the superintendent, considering that you did go through the conversion, I think you got a really good report. And Mr. Rowland was kind of upset to have a couple of them, so I like that attitude, and with his attitude and Nisha's attitude, I think this will easily get corrected this next year. I kind of accused him, he must have been on the debate team at one time, because he was a pretty strong advocate when we came to this discussion. But anyway, the couple comments we had are in the report, and anyway, you got a good report, so I just wanted to share that with you.
Thank you, Ms. Poole, and on behalf of our entire office, we want to thank Tim and his entire team, Amy, they're so professional in how they went about their business, and really we have a great partnership with them. Amy really, she kind of undersold some of the struggles we face with EdLink, and she gave you a very complimentary picture of how difficult this system is to work with, and it's a complete challenge to merge our new system with EdLink. And with a lot of the state systems that we tend to struggle with, not on our end, it's on that. But I do want to thank Tim and his entire team for the cooperation, the professionalism, the effort they gave to give us such a good report at this time.
Thank you. We appreciate the business.
Thank you, Mr. Rowland. Thank you, Mr. Green. Moving to agenda item number 2, request update on the status of audit findings from the 2024 audit by Ms. Nisha Bamberg.
Thank you, Ms. Poole. So I know this is a new agenda item, something that we haven't done in the past. This is something the state is specifically wanting, and I appreciate the opportunity to stand before y'all and give y'all an update on where we are on everything. So Amy just went over the findings. So as y'all know, we had 2 findings. The first finding is the financial side of it. And so there were really 4 main areas of that financial piece: the bank reconciliations. To give y'all an update on that, by next month, I should be able to tell you we are completely up to date. We are mostly there, but to be able to tell you I'm fully up to date, we should have that by our next meeting next month. Budget to actual reporting, that will actually start tonight. You will get your first report. I have spoken with Ms. Poole and the superintendent, and we have come up with a good plan. We have discussed this with the board in the past about monthly financial reporting to the board. It's not been something we've wanted to address at that time, but we do think we have a good plan. I think each month I'll continue the in-depth emails that I send you with the financials, as far as, and with the description of everything that's going on, and then we will be able to include it as a regular line item in our agenda for that month's meeting. And so you will start seeing that monthly financial on the regular board meeting, but that way we don't have to call a finance committee every month. But once a quarter, we do think it's important to set aside some time with the finance committee, the board as a whole, and discuss those financials with y'all and give y'all that opportunity to ask those questions and us have that dialogue about where we are on the financials. And so tonight I'll be presenting up through the November financials, and we'll be caught up and in compliance on that part of the findings, so we do consider that cleared. Capital assets, as Amy hinted at, we did have a turnover in staff in the capital asset area. Because I will be honest, because I was tied up with conversion and bank reconciliations, I did not provide the proper training that was needed at that time. We have remedied that. And so we do not expect any future problems with our capital assets in that area. And then the last piece is on the budget for child nutrition and the LEAF program. LEAF was, I can tell you, was a journal entry error. And so we will have that corrected. That will not be an issue moving forward. And then child nutrition, we will talk about a little bit more when we get to the financials. We can kind of discuss their financial status. But as Amy already hinted at, they did have a loss last year that ended up with a deficit fund balance. So that's the finding number 1. Any questions on that update? Awesome. Finding number 2 has to do with Title I, as she discussed. Part of it has to do with attendance records. Mr. Bates has already sent the email out to principals and staff, reminding them of the importance of signing in and making sure those records are complete. I also wanted to let y'all know, or remind y'all, that we are getting that computerized. Stuart and his team have been working very, very diligently to get that system up and running, and we're hoping by July 1 it will be electronic so that we're away from the paper sign-ins and things like that. So we do believe that will remedy that situation. There was an employee that was paid incorrectly. We have remedied that. That employee has been made whole, and we do not anticipate that being a problem moving forward. And then the time certifications, I've met with Mr. Bates and his team. They had some turnover as well. We've gone over all the requirements, and they are fully up to date on what those are, and I do believe they're in full compliance at this point. So we do not anticipate that being an issue moving forward.
Any questions or comments, Mr. Rowland?
Ms. Bamberg, back to in our finding number 1 with the incorrect journal entry, how did we remedy that issue?
For the EAF budget?
The incorrect entry.
Yes, sir. The incorrect entry was on the EAF budget. That entry was made by a staff that's no longer with us. And so, but the budget itself, we did operate within the bounds of the budget. That entry was corrected before year end, but that entry was included in the budget that was presented to the board. And so that's where the issue came in but by year end, that entry was corrected and we did operate within the bounds of that budget.
Thank you, ma'am.
Thank you. Any other questions, comments, Mr. Bullard?
Ms. Bamberg, looking forward, and I'm deviating from your report, but You have addressed a couple of federally funded programs. In light of everything that's going on right now out of Washington, D.C., do you envision any significant impact on our various federally funded programs? And there's significant Title I.
Yes, sir. I don't anticipate major impacts on the formula grants, which are the primary ones that we're used to, the Title I, the Child Nutrition, the Title II, those. I don't anticipate major issues or concerns there because that's set by federal statute. That money is required to go for that purpose. I do know there's a lot of talks about U.S. Department of Ed, but I also know U.S. Department of Ed hasn't always been around. I know that they're still going to be, unless that federal statute is changed, they're still going to be required to send that money over. So I don't anticipate it with the formula, but with the competitive, yes, sir, I do think some of that could be in jeopardy at times, depending on how that is to go. We do have competitive grants that we get. I can tell you they're not our largest grants. Primarily, they tend to be supplementary grants, and we apply programs based on those grants as they come in. And so, but our formula grants, I'm not anticipating a problem at this time, but I do keep a close eye on it.
Thank you, ma'am. Thank you.
Yes, sir.
Madam Chairman.
Any other questions, comments? Okay, thank you, Ms. Bamber, for that.
Yes, ma'am.
And then moving forward to request presentation of the financial statements for July 2024 through November 2024.
Yes, ma'am. So I have printed you a hard copy of the November 2024. I figured we would kind of go through that one. I did send this to y'all last week, so I hope you've had time to review it, but I also wanted to give us time to go through it today. Just to kind of give you a little bit of the format, we'll go over the headers a little bit. At the back of these, I did add a couple of additional things. This report is not set up to print with fund balance, and so starting on page 56, I did add in the fund balances, and I pointed that out in the email that I sent you, but that way you can see kind of the fund balances that are there. 59 is going to look like a lot of gibberish. Ignore that. That is report settings, so that's not anything y'all would need. But on page 60 and 61, this is something new that I added for this week for the hard copy that I provided you. One of the board members had asked about the number of positions per line item on the budget. This report that I provided tonight is in the same format as the budget that I've given you because I want y'all to be able to see the coherence between those reports. And so this that I gave you is a chart, and if you line it up against page 2 of your financials, you will see that it's in the same flow of functions, and that's the number of active positions today. That was the easiest way to get you that information. So there's possibly vacancies in some of those functions that you would not see lined up there, but this would let you see the active number of positions per line on page 2. So across the top of the page, you'll see the headers. The first thing in the far left top will tell you the fund. So like on page 1, it says 100 general fund. This is going to be our general fund statement. The first column is going to be the original budget. The revised budget is going to be if we made any revisions within the system. We do have some allowance to shift funding throughout the year, but we always bring that back to the board for your approval. The third column would be year-to-date actual, and then you would have month-to-date actual. This is in a monthly reporting format. You would have, the next column is encumbrances, which is going to be outstanding commitments on those funds, and then the available budget and the percentage used. To go over just a little bit of it in general, you'll notice that the first couple of lines, page 1 is pretty much revenue. Some people are going to ask, why is the revenue negative? It's an accounting thing. We're just weird, and we do it that way. revenues are credits, credits are negatives. It's just how the system works. So the reason I print these for you with a negative, and I can tell you I do it on purpose, is so that our net profit or loss in that fund, if I were to print the revenues with a positive, it's going to add revenues and expenses, and it's not going to give you that net profit or loss. So that is the reason that I print your revenues as negatives. I am sorry. I know it's a little confusing, but negative is not bad in this area. The first 3 lines of your revenues or your ad valorem, you'll notice that it's not showing any received. It's because we primarily receive those in January and February based on when the sheriff collects it. So it's not alarming that we don't have any there. A little bit further down, you'll see your interest on investment. It's 1515 interest on investments. I wanted to point this out. We have had a very great year so far in interest earnings. Mr. Rowland and I, with the support of the board, have been utilizing a few different investment types, with utilizing LAMP investments, utilizing T-bills, utilizing CDARS, which is a type of CD investment through the bank, and we have been able to maximize our interest income, which helps enhance the fund as a whole. So we are very thankful for the board in helping us to support that. Overall, though, revenues are coming in on par. Sales tax is looking good right now. This is going to actually be on page 2, and it's going to show as a transfer in on general fund. It's the second one, operating transfers in. For the original budget, yes, sir?
You have a question? Mr. Bullard?
Thank you, ma'am. I'm sorry to,
No, that's fine.
I'm going to go back up to the interest, interest on investments. I think we owe you an attaboy.
Thank you.
Because we can call it what we want, but it's reflective of your recommendation that we make some amendments to our financial agreements. And that this number was nowhere close in years past.
No, sir.
It barely scratched. And now we're at $1.75 million.
Yes, sir. Thank you.
We were leaving money on the table.
Exactly.
And based on your recommendation, and Mr. Superintendent, this is something we can sink our teeth in.
Yes, sir.
Thank you. The people responsible I think they need to be acknowledged because this just didn't happen.
I think the whole board can concur with that.
Thank you.
Thank you, Mr. Bullard.
We did originally budget a 10% loss in sales tax, being very conservative for this year because we were seeing a downward trend for several months. As I've told the board previously, we are starting to see that tick up a little bit. And so we're actually only down about 3% this year. And so that is very positive on the sales tax side. We are starting to see it come up more, and we are hopeful that that will continue. And so the second section on page 2 starts your expenses. It says 51 salaries, and that's the grouping of your salaries there. As I said, if expenses were flat across the year, we should be looking about 41.67. There are several accounts that don't work that way, especially our 9-month employees. They don't start getting paid until the second month of the year, and then we accrue a month back. So their pay's a little shifted there. But as you go through the expenses, you'll see those totals. If there's any specific one you would like me to point out, please let me know. But page 11 is going to be our totals for the general fund as a whole. On page 11, that first line is just a subtotal, and then it says total general fund. You can see that the year-to-date actual is showing a profit for the current year. of $13 million. I will say this is a little attributable to an additional transfer in that we did from the sales tax fund during the current year, and so that's where part of that is coming from. And so this is not all just the activity from that 5 months. But underneath, you can see total revenues and total expenses for the general fund for year-to-date and for month-to-date. And so expenses for November of '25 compared to November of '24, we are actually down about $4 million in expenses, so we've done really good there, continuing to maintain it. And then in the prior year, we actually had a loss as of this point, which was normal because you're waiting on those ad valorem taxes to come in. And so general fund as a whole, that's where we stand right now. That's the first fund. Then you'll continue to see the funds after that. There's some of our more general type funds, the scholarship fund, the insurance reserve, and then you start getting into the grant funds. I did want to point out on page 45, we had talked about the child nutrition program. In the prior year, the child nutrition program did have a large loss of about $1.6 million. We have been working very, very diligently with Ms. Horton and with her entire team. They are doing a lot of reviews. We have the accountants, or the accountant that is assigned to child nutrition has worked very, very closely with her and is having regular meetings. We've already identified areas that we can continue to improve upon. And on page 45, you can actually see that year-to-date child nutrition is showing a profit as of November. Now that profit's only $300,000. This doesn't completely get them out of the hole, but we are expecting them to continue to be able to work on that. They are very hopeful that by the end of the year they will be able to completely eliminate the deficit without an additional transfer in from the general fund. So we will continue to monitor that and update the board on the status of that.
Commissioner Newman?
Thank you, Ms. Poole. What were some big ticket items that have contributed to the $1 million plus deficit?
Well, the deficit was only $800,000. The loss was $1.6 million. They did have some profit that they, or prior year reserves that they ate up. It's a combination of things. You know, milk costs 30% more than it did 2 years ago. So food cost is significantly higher. There were, you've got to continue to monitor labor to make sure it's in line. We had an adjustment on CEP, and so the CEP rate for those, some of those schools went down some, which means that our reimbursement rates are lower. And so we've got to continue to monitor those to make sure that it still makes sense for them to be a CEP school. And so that's what we've been doing with Ms. Horton to try and help with all of that. I will say the summer feeding program has been beneficial for us. That has helped currently because we're able to get a better reimbursement rate on that. And so we are hopeful that we will be able to continue that program as it helps to continue to generate revenue for the district.
Ms. Rowland?
Thank you, Ms. Poole. Just, Ms. Bamberg, just for the board to know, we have seen losses before in child nutrition, and this year, correct me if I'm wrong, but we did not ask the board to backfill the loss this year, correct?
Correct. We did not. We knew that it would be there, and we did not ask the board to do that additional transfer this year. But he is very correct. It's a statewide problem. A lot of the districts, some districts do very well, depending on their ratios, depending on their poverty level, depending on their reimbursement rates. Some do very, very well. Some struggle a lot more. Some end up doing a lot of extra transfers into their child nutrition program to support it. Ms. Horton is very committed and is working very, very well with us to try and eliminate and do everything we can do to make sure that we're running it the most efficiently as possible.
Any other questions or comments? Okay, Ms. Bamberg, thank you. And I appreciate coming up with the quarterly
Yes, ma'am.
review. So that's kind of what we had today with what you did today. We've kind of
Yes, ma'am.
implemented. So any questions about that? The new process of the agenda item and then the quarterly? Mr. Bullard?
I've got a question about one other item. I'm sorry to bring it up, but page 58.
Yes, sir. Mr. Bullard is alluding to the loss in the the health insurance fund. This is our health, dental, and the basic life actually comes out of this fund as well. And so as the auditors presented at June 30, we were over $14 million in the hole in that fund. Mr. Rowland and I have been closely monitoring that and working on that. We have looked at what caused that. The board has been very supportive in allowing us to continue to try and adjust premiums to help bring that up to try and increase the revenue, but the expenses have been far exceeding what we have in the revenue the past 2 years. In fiscal year 23, we were at a $5 million loss or deficit, and then you can see it jump to over $14 million for fiscal year 24. Currently, as you can see for fiscal year 25, we have also seen a significant loss in that fund in just the first few months of that. Now, what we did, Mr. Alleman and I found out that there were some rebates. It was an error on the Express Scripts side, but they did not send us the contract to sign. Because they didn't send us the contract, they were holding rebates, and so we had 2 years of rebates that were due from Express Scripts. Each year of rebates over $2.8 million. In December of 24, we got the first $2.8 million check, and I'm expecting the second one in the mail any day. It's already been mailed. We do think that will help with the current year, but again, as you can see, we also have a loss in the current year. Those rebates will really help for the current year, but we also have to, when we continue to see this, we're going to have to decide, what we need to do. And so Mr. Rowland and I have put together an advisory committee that we are going to get together with a group of stakeholders. And we've actually scheduled our first meeting for March 4th, and we will meet with them to discuss the plan and the different components of that plan.
Just want to assure the board that, we're not happy about this at all, and we never want to come to the board with a problem without a solution, and so that's our objective as we move forward, and we will certainly be bringing the board a lot of different things to discuss and things to consider to help us not only just plug the hole, but to try to fix this going forward with the long-term benefits of Bossier Parish School Board and our employees at the forefront of our mindset. So you can expect something in the next few months.
Thank you, Mr. Rowland. Mr. Bullard?
One follow-up. Ms. Bamberg, you have been adjusting premiums on an annual basis, but if memory serves me correct, you can only adjust 5%. Is that correct?
No, sir. Actually, 2 years ago, we adjusted 9%, and this prior year, we adjusted 5%.
Okay.
We actually have the availability. We have options, but yes, sir, we can adjust more than 5.
Okay. Thank you.
Yes,
Thank
sir.
you, ma'am.
Any other questions, comments? Ms. Bamberg, thank you for your
Yes, ma'am. Thank you.
Thank you. No other questions, comments? We'll adjourn the Finance Committee.
Thank you, Mr.